All right, everybody. Today I'm going to be talking about one of the companies in Canada that has arguably the widest moat in the country. It is a multi-decade, I believe it's 26 or 27-year dividend growth streak company, and it was a very popular stock that people wanted me to go over from the comments section down below. This is another bull versus bear case video. You seem to be loving these videos, so I'm just going to keep on creating them. Remember to like the video, head down below, subscribe to the channel, and comment on what stock you want me to go over next. This week's video is going to be on CN Rail. It's one of the most popular railways in the country and one of the most popular stocks in Canada. And I'm going to be showing you some very, very interesting data in this video. So it's going to be one you're going to want to watch start to finish. Now, just a bit of housekeeping before we get into the video. Thank you so much for 20,000 subscribers. We got back on the YouTube around a year and a half ago now, and we've seen some very strong growth in terms of subscribers, viewers, everything like that. So again, I want to thank you so much. And more importantly, I am going to be giving away 6 Stocktrades premium subscriptions for random commenters on the channel who are subscribed to the channel as a thank you. I'm going to be picking random comments from the videos and I'm going to drop them in the community section of our YouTube channel because I don't really want to make a video and take up a lot of the video doing the giveaway. So if you want a subscription, I will tag you, or at least I will try to tag you in that community section. Pay attention to that section and reply to the comment, and I will get back to you with your free year. But remember, you have to be subscribed and you have to have dropped a comment. I'm going to be doing these tomorrow, so get your comments on this video. But with that said, let's jump right into it. CN Rail. I'm not going to waste a lot of time going over what CN Rail does because honestly, I think everybody knows what they do. They run one of the most diverse railroad tracks across North America. They ship everything you can think of: grain, oil and gas, fertilizer, automobiles, lumber, things like that. I more so want to get into the thesis portion. So the bull thesis for this company is fairly simple. Its economic moat is pretty much it can't be touched, or at least it is very difficult to be touched. And the one reason I will say this is if we look at the average cost of railroad track, it costs millions of dollars to build a mile worth of track. And that would be just standard flat railroad tracks. When we think of anything like bridges, underpasses, overpasses, things like that, it gets even more expensive. So when you think of the fact that these companies have tens of thousands of miles of track, and then you think of how difficult it would be for somebody to actually replicate that infrastructure. I wouldn't even say difficult, I would say borderline impossible from a financial perspective. Sure, somebody could go out and do it, but financially it would probably not be worth it. We can start to see how protected these companies are. The second bull case would just be the fact that we are in a bit of a cyclical bottom here. If we look to a 10-year stock chart of CN Rail, we're seeing a freight recession right now that is causing this stock to dip quite a bit. CN Rail has struggled. But the thing about cyclical stocks is they are often best added at the bottoms like this. Ultimately, rail volumes will rebound, and they're getting more and more efficient these days, which ultimately should be an added tailwind when the volumes do start to pick up, because it should lead to more profitability. And the third bull case here would just be the company's long-standing results. When we look to the last 10 years, we can see they have grown free cash flow per share by 113% over that decade-long time period, and they've grown earnings by around 77%. This is a slow-growing compounder who has been able to drive strong free cash flow per share growth through buybacks, through increased money that it generates per carload, things like that, because there really is nowhere else to go. If you need shipments, it is often by rail, and there is very few companies that can do it. So the bear case, and this is going to be more from a capital allocation standpoint, this is going to provide you with some very interesting data on CN Rail and why I believe they are really not the best capital allocator over the years versus a company like CP Rail. When we look at this chart here, we can see in the red, we have free cash flow generated annually. In the blue, we have the repurchase of common shares, and in the orangish, we have common dividends paid. You can see that CN Rail has effectively paid out more in dividends and bought back more shares than it has generated in free cash flow for a very long time here. And this overall is just not really all that strong capital allocation. And when we look to 2022, 2023, they were buying back shares at a very fast pace in an environment where their stock was likely hitting a cyclical top. And we can see now that they're starting to scale this back with free cash flow meeting dividends paid and share buybacks over the last year. But overall, this was not the best use of capital over the pandemic era. I don't really like this. This is actually what led me to sell my CN Rail shares and buy CP Rail. And another end of the bear thesis here is I'm going to show you CP's capital allocation over the last while and highlight to you how much better it has been. So when we look to CP in December of 2020, they were buying back around $1.5 billion in shares. And then when their share price started going up, they completely stopped buying back shares. They did not buy back any shares. Instead, they just paid out dividends. And we can see that free cash flow more than exceeds the dividends paid and the share buybacks. And now when we get to the last 12 months, we can see the company has started to buy back shares when prices are low. So in terms of the overall bear case, it would be that capital allocation, that management perspective. I do feel that CP has been the better ran company over the long term and has done much better during the pandemic in terms of allocating its capital. So overall, my thoughts on CN Rail, outstanding company. There is zero question about it. The moat is practically impenetrable. The company has done very well over the last while. However, I don't like the way they have been moving money over the last few years. I ended up selling this company and buying CP because ultimately CP has been a much better capital allocator than CN Rail. So everybody, that's it for the video. Thank you again for 20,000 subscribers. Remember, like the video, comment down below, subscribe to the channel. Let me know what stock you want to see next, and you will be entered into a chance to win one of the 6 premium subscriptions I'm going to be giving away tomorrow. And I will be posting that in the community section of the YouTube. So don't miss that portion tomorrow. And as always, everybody, there is a ton of free guides, resources in the description down below. You can grab those absolutely free. They're going to help you become a better investor. And we'll see you next time for more great Canadian content.